$483 made last week, exceeding my goal of 300 last week, which is 2.5% of my overall portfolio. That was made primarily from longing these lows. I went in on a lower time frame and saw a quick 5-minute increase or a market structure shift. We were so close to this weekly bullish order block low. That's this entire blue area here. And I kind of just took a punt with a big position and made a bunch of money there. And then I did a couple of Casper's A+ candle strategy trades to make an extra few $100 after that point. So last week was a success, and this week I'm hoping that we can have some success as well. I did not catch this bottom of this current leg or this trade here, even though I was looking to trade into it. I thought this one might dip deeper, but obviously it wasn't looking like it wanted to. And now currently I'm looking for a retrace to get in long. What do I have marked out here? Well, we have Monday's high, we have Monday's low. This purple line here is the lower high before the lower low of this current leg that's currently being respected. In that, we have an H1 market structure shift that pushed through this area. And we're now trading into the discount of that last leg that pushed above that market structure shift. So I think right now we're in a solid place for a turnaround here. And you don't, in my opinion, it's not wise, or for me at least, to just blind long here. I think what you want to look for is you want to start to zoom in and get into your sniper range, fully understanding that, listen, we swept the Monday high, we're now trading to the Monday low. This right here is an argument we could have shorted this range and made some extra money, but we didn't. I personally shorted a little bit early yesterday on some of these trades up, thinking that we were maybe going to get a retracement, and I was trying to short a retracement into a long opportunity when I should have probably just waited for the long. But that is what it is. We are where we are at now, and I think we can still make some good money this week if we trade right. So what are we looking for in this moment? So if you zoom in onto the 5-minute, well, I guess what we're trying to do is there's two things. We can identify where is the H1 order block that helped disrupt and break this market structure. So this is the clear displacement up. We did trade what appeared to be kind of like this low, but then you also have this here. So there's a solid argument that this right here, this area in here is this is our order block for the H1, just past the 0.5. So we're just in a little bit of discount. And that for the H1, I think that's a reasonable. So we could even set, hey, if we wanted to, I could long and set a stop loss below this area right here. So below 104, set a long here. Are we seeing any 5-minute market structure shift? Because that's technically what we want to see now as well. Ideally, we'd be below the 0.5 and we'd see some market structure shift. So what's the lower low that was formed by the H5? I suppose you could call it this, but this is kind of weak. I mean, I'd really want to see, to be honest, I'd really want to see something like this push down with displacement, right? Maybe push down again. Oh, geez. Push down with displacement and then come up, break through that current lower high, and then come back down again below the Monday low. So it appears we're respecting Monday's low, or even maybe we bounce off the Monday's low. And then we go higher from there, right? So then this right here becomes your entry, kind of in this zone, right? So like right around here becomes your entry. We may not get that from here because we're already technically in, we're right around the 0.5 discount, not technically anymore. We just traded above it. We're bouncing off the Monday's low. which is also to be expected. So we could reclaim the Monday low right here, and we could go higher from here. So we could trade below the Monday low, go higher. From a pure Fibonacci perspective, there's an argument that this little leg here can come up and go down, and there'd be the expectation that, hey, maybe we trade down here, which of course is possible. What does that look like on the hourly? That puts us well below the 0.618. It could happen, of course. But where's your stop? So if we were to enter a trade here, a small trade, I think we could enter a small trade with a little bit of higher position, higher size, and whatever risk you want to do, 1 or 2%, and then set your stop loss below here. That's an option, or even below here. If it dips further, there would be an argument to, if it came down into here, there's an argument to then set your stop loss down here, which would probably be better. But personally, I'd like to wait for the M5 for some level of confirmation. So even if that's this, right? So this, right here is a clear, we're still within the order block technically. So if we're coming up here and we get something like this, where we come up and we break through with displacement, that lower high that formed the current lower low, that is a sign that things are turning around on the M5. It means we bounced off the Monday low and we're probably going to trade higher from here. So then we would want to look to enter on this retracement right here. So that's currently what I'm looking for, but I'd like to see some level of, an M5 displacement to the upside. We may not get that, right? So you're kind of right now, like just kind of looking at using this horizontal ray. This is my current area that I want to see it break through and then trade back into. But it doesn't make any sense to kind of just blind long, because like I said, it could go down here further and then break through here, and then we just adjust the horizontal ray further down and we say, okay, now this is our new lower high if this does break through with displacement on the M5. But right now we're hunting for a long, but we want to react. We don't want to guess, we don't want to hope, right? So we want to take a look at the chart and we want to say, okay, this is what price action, this is what the market is telling me it wants to do. And then once it says it on the M5, that's your risk. You get into your position, you're entering in a smart way, and then you go. And the idea is that we can zoom out a little bit. The idea is that, if we can get this, right? So clear displacement up, in my opinion, even technically on the H4. So if we can get this, maybe comes down to here, that'd be great. We can get a lower entry, set our stop below there. We can then have the price go higher into these zones. We'd be looking for a breakthrough 110, looking through a breakthrough 111 to 112, and then hopefully higher. But this is a great opportunity here. If you zoom out again, we are still in this weekly bullish order block zone. So getting an entry in here is great. If this goes further down, we can get a long entry here. That's awesome. Does that mean it's going to go higher? Not necessarily. I think there's obviously the potential that, we enter here and it just bounces off the Monday low and it just doesn't reclaim the Monday low at all, and it just goes lower. Maybe it's hunting this yearly open. Maybe it's hunting the other low over here, and it wants to go through and grab some liquidity down here before reversing. The bottom may not be in for the next leg up, but all you can do is react, not guess, not hope. React to what the current market is giving you. Stay consistent with your strategy and don't gamble. Follow a mechanical strategy and look out for your emotions that can obviously get you into a lot of trouble if you start revenge trading or fear trading. I've certainly done that plenty of times, and we don't want to do that. So I think the current, this hasn't been denied yet, so we're looking at that now, and that's what I'm going to do, and hopefully we get a trade. I'd stay on here, but I actually got to work, so